Hey traders, welcome back to Uncle Sam Trading. Today we're diving deep into another classic indicator that's often misunderstood and misused, the MACD. So if you're only using MACD for basic crossovers, you're missing out on a whole world of trading opportunities. Today I'm going to show you how to unlock the true power of this versatile indicator and use it like the pros do. But first, a quick reminder about something awesome. Don't forget to check our brand new website, unclesamtrading.com. We've got a treasure trove of premium trading indicators and a custom indicator design service waiting for you. Head over there after this video to level up your trading game. Alright, let's get back to the MACD. This bad boy stands for Moving Average Convergence Divergence. Sounds complicated, right? But don't worry, I'll break it down in a way that's easy to understand and even easier to apply. Starting with myth number 1. Crossovers are king. Now, crossovers can be helpful, but relying on them alone is a recipe for disaster. See this chart? The MACD crosses above the signal line, you jump in and voila! The price reverses and you're left holding the bag. Why? Because crossovers can be misleading, especially in a choppy or sideways markets. Myth number 2. The histogram is everything. The histogram, this bar chart down here, tells us about momentum, but it's not the whole story. Sometimes the histogram can be screaming buy, while the MACD line and signal line are telling a different story. You need to look at the whole picture, not just one piece. And finally, myth number 3. MACD is only for trend following. Wrong again. While MACD is great for spotting trends, it can also be used in range-bound markets, simply to identify overbought and oversold conditions. See how the price bounces off this support level when the MACD reaches an extreme low? That's a potential buy signal. Alright, now that we busted those myths, let's get back to basics. We all know MACD has 3 main components: the MACD line, the blue line here, the signal line, the orange one, and the histogram, this bar chart. The MACD line is calculated by subtracting a longer-term moving average from a shorter-term moving average. So in reality, the signal line is a smooth version of the MACD line, and the histogram shows the difference between the two. The standard, by default, MACD settings are 12, 26, and 9. But you can tweak these numbers to make the indicator more or less sensitive. A faster MACD will react more quickly to price changes, while a slower MACD will be more sluggish. So experiment to find what works best for you. Now, how do we actually use the thing? Well, the MACD is a momentum oscillator, which means it tells us about the speed and strength of price movements. When the MACD line is above the signal line, it suggests that the momentum is bullish, and when it's below, momentum is bearish. And the further apart the lines are, the stronger the momentum. Now, one of the most powerful MACD techniques is divergence. Just like with the RSI, when the price makes a lower low but the MACD forms a higher low, that's a bullish divergence. In reality, it suggests that the selling pressure is weakening and the reversal could be on the horizon. And do never ever forget about hidden divergence. When the price makes a higher high but the MACDs form a lower high, that's a bearish hidden divergence. It suggests the uptrend might be losing steam. Well, remember those crossovers we talked about earlier? Well, they can be very useful when confirmed by other signals. For example, if the MACD crosses above the signal line and the price breaks through a key resistance level, that's a much stronger bullish signal. The histogram itself can also give you very useful clues. Look for changes in the histogram's height and direction. If the histogram is getting taller and pointing upwards, that's a sign of increasing bullish momentum. If it's getting shorter and pointing downwards, then bearish momentum is taking hold. Now let's see this all come together in real trade example. Here's a chart of Bitcoin, BTC, USDT. Notice how the MACD formed a bullish divergence with the price, and then the MACD line crossed above the signal line. We also had a break of resistance and increasing volume. All these factors combined create a high probability buy signal. We enter the trade here and exit here for a nice profit. Now let's recap the key takeaways. First, do never ever rely on MACD crossovers. Second, analyze the MACD line, the signal line, and histogram all together. Third, use MACD divergence to spot potential reversal. Fourth, confirm MACD signals with other analysis techniques. And most importantly, manage your risk with stop-loss orders and proper position sizing. Now that you are about to master MACD, you're well on your way to becoming a more profitable trader. But remember, knowledge is power. So keep learning, keep practicing, and keep growing your trading skills. And if you'd like to take MACD analysis to the next level, head over to UncleSamTrading.com. We've got premium indicators and a custom indicator design service to help you unleash the full potential of your trading. Don't forget to like, share, subscribe, and leave a comment below with your questions or trading experiences. And as always, happy trading!